Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the City of London.
The City of London.
The next station is Bank. Please mind the gap between the train and the platform.
The financial heart of the country.
The City.
The City.
Welcome to In the City.
Stand clear of the doors, please.
Welcome to In the City from Bloomberg. Each week we dive into a story that's crucial to the world's financial capitals. I'm David Merritt. And this week we are actually recording from New York City, but our story is London itself and how it's doing in the ever-present battle for supremacy as the world's financial capital. We've been looking at the latest ZEN Global Financial Centres Index, and it's got, what you could argue is perhaps a surprising result. It shows that London is closing the gap with New York for the title of the world's top financial centre. This is the 37th edition of the Global Financial Centres Index, and it showed London in second place, but it had climbed 12 points since September. London is well ahead of the pack in terms of the European rankings. It's got a 19-point lead over Frankfurt, which isn't even in the top 10. And London was in the top 3 categories for 8 major financial industries and was the first for banking. And in Fintech, it cut the gap with New York to a single point. So a subject we've covered on this podcast over the years a lot, of all the uncertainty of Brexit, all the headwinds the UK's faced. The city seems to be thriving. So how has it pulled it off? Well, to talk about this, I'm delighted to be joined by Chris Hayward, the policy chairman of the City of London Corporation. Chris is the principal spokesperson and advocate for London's global financial and professional services industry. And with a career spanning over 4 decades, he's founded, led and expanded businesses across industries ranging from aviation, publishing and construction, both in the UK and around the world. Great to have you here, Chris.
Fantastic to be here, David.
And, so you're on a visit to New York as well. They like to have these banners on the lampposts around here, don't they, saying the world's financial capital. Are you here to sort of disrupt that?
Absolutely. I mean, I won't rest until the City of London is number one. And it's always close between us and New York. But frankly, you made the point that we seem to be doing rather well. I think we're in a renaissance period, actually, the city at the moment. We're finding that we can't actually build tall office towers fast enough to cope with the investment and development needs of big businesses around the world. And our vacancy rates in those offices are down to 1.2%. Which is remarkable, frankly, when you think about it. Now, what's been happening? Well, past 10 years, I've had people telling me, well, London's moving east. Everything's going to Canary Wharf. Everything's going further to Newham, etc. Well, it's now coming back. Just done the deal with HSBC to move them back into the city. That's 8,500 new jobs. We've done a deal with Clifford Chance, the big global lawyers, to build new offices for them. And there are others in the pipeline. And then we're finding it's coming the other way as well from the West End. So some of the hedge funds who have traditionally been in Mayfair are saying, can they come into the city? So we are really, really expanding.
Maybe I rashly said it's a surprise because obviously it doesn't seem like it's a surprise to you that we've gone up the ranks. Maybe we've over-agonised, and this podcast being a venue for that, about the rise of Paris, for instance, for Europe. Whatever happened to Paris is eating London's lunch?
Well, look, it hasn't happened is the simple thing. I mean, the City of London has proved itself totally resilient in the wake of Brexit. I mean, it's been a long and painful divorce of some 8 years.
We've done a lot of the details.
It's been very, very tricky. Yeah. And my fear, I'll be absolutely honest with you, 8 years ago, was that we would lose huge numbers of jobs to Europe, particularly in passporting. Now, The reality is, in the financial services sector that I speak for, it's a total of 7,000 jobs across the whole of the United Kingdom. And of course, new jobs have been created on the back of European companies who now say, well, because you're out of the EU, we need to open up in the city. We need to put our back offices in the city as well. So overall, we've proven ourselves resilient to the Brexit challenge.
We've got a big EU-UK summit coming up, or kind of this chance for Starmer. He's talking about resetting with the EU. So presumably things might get easier. I mean, I guess the fear was we were going to try to diverge. The EU could play a bit more hardball, and they could have made things harder for us in the end.
They could.
And, let's face it, the French, you wouldn't blame them, want a bit of that business. They want a bit of that traders and investors to come to Paris. But do you feel like we're in a bit more of an equilibrium, that Europe needs us, we need them, but we've got the balance right?
Look, I think that's true. And I mean, actually, when you talk about the reset, I think we've got to manage expectations around the reset, because there is no backdoor route back into the EU, even if we wanted one. So we've got to be realistic about how much can be achieved by the reset. But what we need to do is to start being able to talk to each other and work with each other once again. And we haven't done that for 8 years. It's been very, very tough. But now we've got our financial services dialogue up and going again with the European Commission. So that means our Treasury are talking to them and discussing with them. And Europe, I think, has now accepted that where we are is that we want to be good friends and neighbours with them, because they are critically important to us. They're our closest trading nation, and it's in our interests, frankly, to work together, particularly on things like regulation. There are so many areas around, AI, around green finance, around all sorts of areas in financial services where we need to work together. But I do think the other area where we will find that there is a restructuring of the relationship is around defence, because we now know that the President of the United States has told Europe, probably rightly, that we now need to put money in ourselves as well. We're not going to be able to rely on the US to completely subsidise, as it were. And so every nation state in Europe has got to work together on that, as they have on things like, a solution to the Russia invasion of Ukraine.
There was an argument, wasn't there, I remember, from the the sort of pro-Brexit camp was saying, look, Europe can't just cut itself off for the City of London. It's going to increase the cost of capital for European companies. They're going to harm their own economy. But I guess the temperature was so red hot at one point. I was like, well, they're going to do it anyway. Yeah,
it was just too red hot, frankly, but it's calmed down a lot, and it is in the interests of both parties to work together and to accept that we are outside of Europe. But the reality is, if you think of all the European banks, right, they may well do their domestic banking in their countries, but when it comes to international banking, it's all done through London. Yeah. So London will remain and has remained a hub.
I mentioned in the survey, it's about across all those different metrics, that kind of number one in banking. I mean, what are the area, and fintech nipping at the heels of New York City, which is something that obviously the city has been very keen to position itself as a world leader in. What are the other areas where we need to do a bit better?
Fintech we have done really well, although let's not go over the top on it. I mean, we're very good at startups. We're not so good at scale-ups. You made reference earlier, David, to the issues with listings.
Right, and Revolut.
Yes, well, precisely. So listings are down. IPOs are down all over the world, but there's no doubt that our high-growth British businesses, of which fintechs are a good example, when it comes to listing, often will come and list on NASDAQ rather than on the London Stock Exchange. Why? Because they can get valuation that's 2.5 times what they get in the United Kingdom, and they can also, of course, get the increased capital from the US. And we need to address that. One of the ways we're addressing it is something called the Mansion House Compact, which is where we've signed up 11 big pension providers who said they will contribute 5% of DC pensions to a pot, to a fund, which ultimately will build to around £50 billion, and that will be invested in high-growth British businesses. And I think that's terribly important. Obviously, the US Stock Exchange, New York Stock Exchange, has become a challenge for us in that area. But it's an area where I think we can continue to do more.
Do you think the events of the last few weeks have changed it a bit? I mean, if you are, say, you're a fintech company with who can remain nameless, you're thinking maybe your headquarters in London, you may have been thinking about New York. You look at the volatility that's been occurring in the United States markets and the political uncertainty and all the question about tariffs and even visas and all these questions. Do you think again? Are they thinking again?
Well, look, let's be clear about the tariffs. We don't welcome tariffs. I mean, that's a fundamental statement to make at the start. On the other hand, the United Kingdom has, let's just say, got away with it reasonably, 10%. Actually, there's no tariffs on services. That's very welcome. And I do think, I know we always play on this words, the special relationship, but I do think there is a special relationship between the United Kingdom and the United States. But America at the moment is volatile. Its politics because it's volatile. On the other hand, Europe is also over-regulated and is actually not experiencing growth. And the one thing we've got to do in the United Kingdom is to grow the economy. And this is what the UK government has said. And that means we've got to start thinking outside the box on things like risk. So what I think is very good in America is that, you know, where entrepreneurs fail, you pick them up, dust them down and put them out there again. Unfortunately, we need more of that culture in the United Kingdom. At the moment, you're a bit of a pariah if your business fails. So what I'm saying to the Chancellor and to the government is we need to encourage what I call responsible risk-taking, because since the financial crash, we've more or less lost that. And you will never get economic growth if there's not an element of risk.
Right, and we're taping this on Wednesday in New York. We had a negative GDP print this morning for the first quarter, which from forecasts of much more positive only weeks ago, people are talking about the probability of recession here. Britain's not going to escape the sort of downturn that would induce, is it?
No, it's not. Unfortunately, if that happens, the chances are Britain would end up following the same route, I'm afraid.
The difference, I guess, Rachel Reeves's position is difficult and precarious, isn't it? There was a lot of talk before the election about how friendly she was going to be to the city, and what I think our reporting has shown since then is that people feel that she hasn't stood up those promises. What's your scorecard for Rachel Reeves?
Well, look, I'm not sure I should give her an actual number out of 10 because that's not my job. But what I would say is this: she hasn't got a lot of headroom. You're quite right. Now, she will argue and did argue when she came in. There was this big black hole.
Yeah, we heard a lot about that.
But to be honest, every government does that when they come in. There's always a big black hole left by the last government. We've said to her that we need to have a globally competitive tax system, which we haven't got at the moment. She knows that that's something that she's got to achieve. We've also given her some advice around something we call Vision for Economic Growth, which is a piece of work I commissioned a couple of years ago, which came out with ideas as to how you get that growth. And I'm very pleased to be able to tell you that one of those ideas is that we increase our foreign direct investments. And we've agreed with the Treasury and with the Chancellor that we, the City of London Corporation, will partner with them to develop an investment hub, a concierge service, if you will, because it's my belief we've slipped behind our global competitors in the area of foreign direct investments. And we don't make it very easy for people to invest in the United Kingdom, right? It's actually a challenge. You actually have to work quite hard to do it. What we've said to the Chancellor is...
They did a summit, didn't they?
They did. They did a global investment summit within their first few weeks. Right. And they hosted it at Guildhall, our global headquarters. Well, it was a bit quick, I think, in a way.
Right. They did it before the budget, didn't they?
They did, and there was the uncertainty. But what I do believe is that Rachel Reeves genuinely believes that economic growth is the only way out of the crisis, that you cannot spend more on public services if you don't create growth and increased wealth. And therefore, what we've got to do, I think, all of us in the City of London Corporation and in the sector that we represent, is try and keep her focused around policies that will drive that growth. Now, growth doesn't come overnight. Let's be absolutely clear. You can't wave a magic wand and create economic growth. But we've had no economic growth, or precious little, in the United Kingdom for the past 15, 16 years. Whilst look at the growth that you've had here in the United States. It's been remarkable, frankly. And I think that's also about culture. It's also about how you get the regulators, the financial regulators, to contribute towards making us globally competitive. So regulation is important. Proportionate regulation is. We don't want to race to the bottom. And that's one of the things I'd like to see the government act on.
Is there a risk in that you might want us to diverge a little bit too much from the European norms on this? I mean, how do we strike that balance between make ourselves a little bit more risk
a little bit
appetite?
More, yes, risk appetite,
but
now,
not severing ties with Europe.
No, I don't want to sever ties with Europe. Just the opposite. I want to build on that relationship. But let's be blunt. We're out of Europe now. We don't have to do what Europe does, right? We are an independent nation, and that allows us the flexibility to look at our own regulations and decide what's the best route forward for us. And I do think we need to diverge a bit. I do think we need to take a better approach to risk. It's very important that we do, but it should be responsible risk-taking, not rash risk-taking. But we have to recognise that part of the economy, part of an economic cycle is that businesses will fail as well as succeed.
Do you have alignment on that point, do you think, with the regulators that we've got in position at the moment in Britain? Or is there a divergence of views on that point?
Look, I think you've got to accept, first of all, the regulators are independent. Secondly, regulators do what says on the tin. They regulate, right? And I think they have been very nervous because they know that if things go wrong, they're summoned in front of a select committee of the House of Commons, they're hauled over the coals and told, you weren't doing your job as a regulator. Why has this business failed? Why has this person's pension gone? And therefore, what we've got to do is give them some protection to allow them to feel more confident, to lighten up a bit and allow some risk to come through.
Chris, I just want to go back to what you said at the beginning about the building and the vacancy rates. I think, next time when you come on the podcast, we will do it in our London headquarters, right in the middle of the City of London, by the Bank of England. The skyline in the city keeps on evolving, keeps changing, keeps growing, more high rises. Can you give us a flavour of where you see the next few years going? If this demand continues, are we going to see that more mushrooming skyscrapers in the square mile? Is it going to continue to grow?
I think the answer to that is yes. I mean, the way that I lead the City of London Corporation is to treat it like a business. If it isn't growing, it's falling back. You cannot stand still against global competition, right? So whether it's up against New York, whether it's up against any other city, we have to keep growing. When I first took on this role, it was immediately in the aftermath of COVID. And the first thing that concerned me most was the SMEs, because our SMEs had been obliterated, the little coffee shops, the sandwich stores, etc. And I said, what we need is new footfall and new spend. And so I launched a flagship policy called Destination City, which is all about reimagining the city. And now we've got a city with a vibrant nighttime economy, with a really strong retail offering. We've got workers whose demographic is much younger than we've ever had before, and they want to work and play in the same place. When I first came into the city 35 years ago, the pubs closed at 7 or 8 o'clock in the evening. You had to go to the West End if you wanted a nightlife.
It is actually heaving on the streets now.
It's now heaving.
Like a Thursday night.
Thursday is the old
That's
Friday.
The new Friday,
right? The new Friday, rather. Yeah,
but there's more places to eat. There's more.
There is.
Great places to eat. As well.
There is great places, fantastic restaurants, great bars.
In the Bloomberg Arcade.
Arcade, particularly in the Bloomberg Arcade, of course.
Number one.
Number one. And the city is very, very different to what it was 20, 30 years ago. Now, do I see this continuing to happen? Well, it certainly will if I have anything to do with it, because I believe that you have to continue to grow, to evolve, and that the way to do that is to make your city the most attractive place for businesses to invest and want to be there.
Chris, it's been a pleasure having you on the podcast.
Thank you very much, David.
Thanks for listening to this week's In the City from Bloomberg. This episode was hosted by me, David Merritt. It was produced by Summer Sadi, Moses Andam and Tala Ahmadi. Brendan Francis Newnham is our executive producer. Special thanks to Chris Hayward. Please subscribe, rate and review wherever you listen to podcasts.